All right, let's get right to it. No fluff, just the facts. People ask me all the time, Kramer, what's the next big thing? How do I get an edge? Well, listen up, because this is important. We're talking about something called sentiment analysis. Think of it like this. The stock market isn't just a bunch of numbers on a screen. It's a living, breathing thing driven by human emotion. It's fear, it's greed, it's excitement, it's panic. Sentiment analysis is the art and science of measuring that emotion. It's about figuring out whether the overall feeling out there is positive, negative, or just plain neutral. It's taking the temperature of the market's mood. For decades, the best traders have done this by instinct. They'd read the papers, watch the news, and get a feel for things. They'd listen to the buzz on the trading floor, but that was then, and this is now. Today, that buzz is happening everywhere, all at once, 24/7. It's on social media, it's in news articles, it's buried in corporate earnings reports, and it's in millions of forum posts. Trying to track all of that with your own two eyes is impossible. You'd need 1,000 lifetimes. That's where the machines come in. That's where the real revolution is happening, folks. So why should you care? Because sentiment is a powerful, powerful force. A stock can have perfect fundamentals, great earnings, low debt, fantastic products. But if a wave of negative sentiment crashes over it, that stock price is going down, down, down. Conversely, a stock with shaky numbers can get lifted into the stratosphere by pure hype and positive buzz. Think about the meme stock craze. That wasn't about price to earnings ratios. It was about pure, unadulterated sentiment. Understanding this is not just an advantage, it's becoming a necessity for survival in today's market. This isn't just some fancy Wall Street jargon I'm throwing at you. This is the key to unlocking what moves a stock beyond the balance sheet. It's about understanding the why behind a price move. Is a stock dropping because of a legitimate problem with the company? Or is it just caught in a wave of irrational fear? Is a stock rising because of solid growth? Or is it being pumped up by a coordinated online campaign? Answering these questions can be the difference between making a brilliant trade and getting caught holding the bag. It's about being ahead of the herd, not trampled by it. So how does this magic work? It's all about artificial intelligence, or AI. These aren't your sci-fi movie robots. These are incredibly sophisticated computer programs. They use something called natural language processing, or NLP. In simple terms, these AI models have been trained to read and understand human language just like you and me. But they do it at a scale and speed that is simply superhuman. They can scan millions of news articles, social media posts, and financial reports from all over the globe in the blink of an eye. Think about that. It's insane. These AI algorithms don't just count keywords like buy or sell. No, that's amateur hour. They're much smarter than that. They can understand context, sarcasm, and nuance. They can tell the difference between the earnings report was a disaster and the disaster relief company reported great earnings. They analyze the tone and assign a score, positive, negative, or neutral. Some of the newer, more advanced systems can even detect specific emotions like fear, confidence, or confusion, giving traders an even deeper layer of insight into what's really driving the conversation about a stock or the market as a whole. Once the AI has gathered and scored all this data, it looks for patterns. It connects the dots between a surge in positive chatter and a subsequent rise in a stock's price. For example, back in the day, a major news network might have reported on a company's breakthrough and the stock would pop the next morning. Today, that buzz starts online, maybe with a few influential tech bloggers or on a popular Reddit forum. The AI can spot that emerging trend hours, or even minutes, before it hits the mainstream, giving a trader a crucial head start. This isn't about predicting the future with a crystal ball. Let's be clear on that. It's about making a more educated guess. It's about turning the chaotic noise of the internet into a clear, actionable signal. It helps traders see if a trend is building momentum or losing steam. For instance, if a company's stock is falling, but the AI shows that online sentiment is actually turning positive, it could signal a bottom is near and present a huge buying opportunity. It's like having a team of 1 million research analysts working for you around the clock. Booyah! You might be thinking, okay, Kramer, this sounds great, but this is probably just for the big Wall Street hotshots, right? And you're partially right. The biggest users of this technology are the institutional investors. the massive hedge funds, the investment banks, the pension funds. These guys manage billions of dollars and have been the pioneers in this space. They pour enormous resources into developing proprietary AI models for what's called algorithmic trading. This is where computers make trades automatically in fractions of a second based on sentiment data and other factors. They're looking for tiny, fleeting advantages they can exploit at massive scale. These big firms use sentiment analysis for more than just high-frequency trading. They integrate it deep into their risk management systems. For example, an AI can monitor all the companies in a portfolio for sudden shifts in public perception. If a negative story about one of their holdings starts going viral, the system can flag it instantly, allowing portfolio managers to investigate and potentially sell the position before the damage gets worse. It's a high-tech early warning system. They also use it to manage their portfolios, finding undervalued gems that the market is just starting to get excited about. But here's the beautiful part, and you need to listen closely. This technology is no longer locked away in the ivory towers of Wall Street. It's being democratized. Thanks to cloud computing and a whole host of new companies, powerful AI sentiment analysis tools are becoming accessible to everyone. There are now platforms and services that do the heavy lifting for you, delivering easy-to-understand sentiment scores and alerts directly to your phone or computer. Regular, everyday retail investors can now tap into the same kind of data the pros use. This levels the playing field like never before. So, whether you're a seasoned day trader or someone just managing your retirement account, these tools are for you. They can help you validate your own research or challenge your assumptions. Maybe you love a company, but you see that sentiment online is turning sour. That's a sign to dig deeper and find out why. Or maybe a stock you've never heard of suddenly starts lighting up the sentiment trackers with positive buzz. That could be your next big winner. It empowers the individual investor to make smarter, more data-driven decisions instead of just trading on a gut feeling or a hot tip. The benefits here are obvious. First, you get speed. The AI can process information faster than any human ever could, giving you real-time insights as events unfold. Second, you get breadth. It covers a massive amount of data from sources across the globe that you'd never see otherwise. This leads to the third and most important benefit, potentially more accurate and profitable trading. By understanding the emotional currents of the market, you can better anticipate shifts and position yourself to ride the wave instead of being crushed by it. It's a game changer, plain and simple. But, and this is a big but, it's not a magic bullet. There are challenges. One major issue is the black box problem. Sometimes even the creators of these complex AI models don't know exactly why the AI reached a certain conclusion, making it hard to trust. Then there are the regulators who are getting nervous about how these powerful AI systems could affect market stability. And we can't forget that these models are trained on past data. They can be fooled by truly unprecedented events, the so-called black swan events that nobody sees coming. The AI is a tool, not a god. We've already seen real-world examples of this in action. Take the case of Kavoot, which launched its Invest GPT tool in 2024 and its chi-score in March of 2025. These tools use AI and natural language to analyze tons of data and rank stocks, giving investors a clear signal. Another example is the meme stock phenomenon. AI tools were critical for traders trying to track the explosive surges in sentiment on forums like Reddit's Wall Street Bets, allowing some to get in early while warning others of the extreme volatility. These examples show the power of tracking the crowd's emotion in real time. So what's next? The future is more integration, more power, and more access. We're going to see AI sentiment analysis become a standard feature on every major trading platform. The AI will get even smarter, understanding not just text, but also the sentiment in video and audio from news clips and earnings calls. The market for this technology is exploding, projected to grow from around $5 billion in 2024 to over $11 billion by 2030. For you, the investor, this means you'll have more powerful tools at your fingertips than ever before. The question is, will you be ready to use them? Don't get left behind.